Stocks were flat today after the better-than-expected jobs number, but they had a big up week across the board. And what's so interesting is that gold plunged the week. The dollar rose, so that's a little bit of a role reversal. Incidentally, oil had a very strong positive week. That's one of the reasons I'm going back to drill, drill, drill. Now the question is the recession over? We have CNBC contributor and inflation czar Don Luskin of Trend Macro. We also have CNBC contributor and recovery czar, syndicated columnist Jerry Bowyer. Our whole show is about czars, gentlemen. Yes. Let me ask Mr. Luskin, is the recession over after today's better-than-expected, smaller-than-expected jobs loss?
Well, the recession's been over probably for about 2 months. I think when the NBER finally gets around to officially dating the trough, they're going to say it was last month. They're going to say it's May. That leaves some very important questions of how robust, how long-lasting a recovery there's going to be. I'm not optimistic about it. One of the many reasons I'm not is because we've got too many czars in the way. Czars are not about growth. They're not about productivity. They're about protecting people from competition, and competition is the thing that creates growth and productivity. So we're going to have a long slog back up to full capacity in this economy.
Jerry Bowyer, what about recession ending? What is the impact of czars? And has the inflation scare gone away? It's really interesting. Gold really got whacked, and the dollar finished very strong. I mean, speaking of czars, the English government's gone down, for heaven's sakes. I don't know why anybody would want to own the pound against the dollar. What's your take on this story, Jerry?
Well, Czar Jerry says das vidanya to the recession. The recession is rearview mirror. That's over. That's gone. Take it away. Now this is all about what the recovery is going to be like. And I think Don and you both have a good point. There's too many czars, in this mix, and they're picking winners and losers. So social workers and school teachers are in, according to the czars. Oil rig workers are out, according to the czars, and that's, so the mancession is probably going to continue for a while, even if the actual recession is gone. So look, I see a recovery. I see a recovery that's probably going to have some pretty good momentum in the beginning, but the limit to the recovery is going to be set by the political class. Either they do away with the czars and let the horses run, or these czars keep control, and then we have a recovery with a lid on it.
We're going to have more czars than the Romanovs had over 300 years. Don Luskin, the monetary czar, Ben Bernanke, in my view, will not look at this data as favorably as either you or Jerry Bowyer are looking at it. And I don't think that he will tighten monetary policy or consciously protect the dollar or fight inflation for at least a year, if at all, in my lifetime.
There's no question about that. He has two reasons for doing that. One, which I believe is correct, which I would do if I were in his role, and the other incorrect. The correct reason is just simply a question of risk management. He is willing to tolerate a great deal of inflation in order to prevent any risk at all of even a little deflation. That's the right thing to do. The wrong thing to do is to assume that he has a get-out-of-jail-free card and that he can continue to print money, keep interest rates low, grow the Fed's balance sheet with complete abandon on the theory that there is an output gap that is somehow going to magically absorb that without an inflationary consequence.
Well, the unemployment rate is a lagging indicator. It's going to go up some more. We all know that. Michael Darda says it may peak in the next month or two. Some people think not until next year. But the reality is they're targeting the unemployment rate, right? So that's, they're not going to tighten. There's no inflation worries.
They've got the Phillips curve problem. And keep in mind that Czar Bernanke is up for Czar renewal next year.
Right.
And he doesn't want to end like Nicholas and Alexandra. He wants to actually get more time in that position.
Lenin term limited the Romanovs. 1917. But Jerry, let me go to a sec. I want to play the other side on the Bulla side.
Yeah.
Our friend Scott Granis, a great blogger, he's talked about how profits in this downturn have been stronger than any downturn in history. And also, we got fresh numbers this week. American businesses are still productive. Productivity has been stronger in this downturn.
It was revised up.
Now, that's really quite remarkable. That suggests to me that a good note of optimism is called for in the outlook.
Yeah, Larry, you know who the heroes are of this recession? American business managers. They were flexible. They moved quickly. They moved preemptively. They cut their costs. They have done a very good job. America has the best business management class in the world, the most flexible labor markets, at least up until now, until the czars are taking control of it. And they reacted to the recession and did the right thing. So we actually had profit growth in the first quarter in the middle of a recession.
Last few moments here, Czar Don Luskin, I want to ask you, is this trend going to continue? If the U.S. economy is recovering, does the dollar go up now and gold go down?
It all depends on what Bernanke does. I think Bernanke's going to be very, very slow to respond. I think gold breaks to new highs above 1,000. I think the dollar's probably going to head lower. By the way, would you please appoint me the czar? And my first act will be I'll eliminate all the czars.
I want you to be the monetary czar. Don Luskin, thank you. Jerry Bowyer. Coming up more of the Kudlow Report.
Vidanya.
Catch me Monday, 11 a.m. on the call. We'll be right back tonight.